your investment strategy probably still smells like it came out of the 1950s. No offense, but the same formulas your grandparents used are still being recycled on Wall Street. Those dusty rules were made for a world without crypto, without AI, and without 12 different ETFs tracking the same idea. So here's the question. What if there was a way to sort through millions of possible portfolios all at once, instantly finding the one that's actually perfect for you? Not good enough, but truly optimized. That's what quantum-inspired investing is starting to do, and it's about to flip everything we thought we knew about building wealth on its head. You've probably heard of modern portfolio theory, right? Harry Markowitz's Nobel Prize-winning masterpiece that basically says, don't dump all your eggs in one basket, spread them out. It's been the golden rule for decades, but here's the catch. That rulebook was written when investors only had a handful of assets to choose from. Fast forward to now, and the financial buffet has gone off the rails. Stocks, bonds, commodities, crypto, real estate, and probably someone out there selling fractional ownership of a vintage toaster. Trying to find the best mix among all that? Mathematically insane. Picking 30 stocks from a list of 100 already gives you a number so huge it barely fits in a calculator. Add the different percentages you could invest in each, and suddenly you're staring at more combinations than atoms in the known universe. No computer can brute force that. So financial firms cheat a little. They use shortcuts and models that spit out pretty good portfolios. But pretty good isn't the same as perfect. And in volatile markets, that difference can cost you a fortune. That's where quantum computing enters the chat. And don't worry, we're not about to pull out a chalkboard full of physics equations. All you need to know is that quantum computers think in a completely different way. Instead of flipping between ones and zeros like a normal computer, a quantum bit, or qubit, can be both at once, thanks to something called superposition. 2 qubits can juggle 4 states at once, 3 can juggle 8, and by the time you get to a few hundred qubits, you're crunching more possibilities than there are stars in the galaxy. And then there's entanglement, the spooky connection Einstein hated. It means 2 qubits can be linked no matter how far apart they are. Change one, and the other instantly reacts. For portfolio building, that's perfect. Markets are a tangled mess of interconnections. Oil affects airlines, currencies affect exports, and so on. Quantum systems don't just tolerate that chaos, they thrive on it. Imagine trying to find a needle in a haystack, except instead of checking one piece of hay at a time, you could look at the entire haystack simultaneously. That's what quantum does for finance. It takes the near impossible problem of finding the best portfolio and turns it into something solvable. Here's how it plays out. You feed the quantum system your financial goals. Maximize returns, limit risk, include ESG rules, avoid fossil fuels, whatever floats your ethical boat. Then you toss in all the messy real-world constraints like taxes, trading costs, and liquidity. A normal computer would panic and crash. A quantum computer just shrugs and gets to work. Everything you care about gets turned into a kind of mathematical landscape, full of mountains and valleys. Somewhere in there is the deepest valley, the perfect combination of investments. Classical computers wander around hoping to stumble into it. Quantum computers? They tunnel straight through the mountains and head for the bottom. That's called quantum annealing. And yes, it's as cool as it sounds. Companies are already running experiments using algorithms like VQE and QAOA, fancy acronyms that basically mean, let's use quantum logic to find the smartest portfolio possible. And while some of these setups still rely on hybrid systems, part classical, part quantum, the results are promising. They're not just finding faster answers, they're finding better ones. The benefits are bigger than just squeezing out higher returns. Quantum strategies can actually see the way assets behave under stress, meaning they're better at preparing for those rare but brutal market meltdowns. Think of it as portfolio stress therapy, anticipating panic before it hits. Then there's personalization. You could build a portfolio that matches your exact goals, say steady income, low taxes, low carbon footprint, and a sprinkle of meme stocks for fun. Traditional models would melt under that complexity, but a quantum optimizer handles it like a Sudoku puzzle. And soon, these systems could adjust in real time. Markets move fast, but quantum computing could make portfolios that shift automatically as trends, risks, or opportunities pop up. Your investments would evolve alongside the market, like a self-tuning orchestra that always stays in harmony. Energy efficiency might even join the party. Quantum machines are power-hungry now, but in theory, they could one day outcompute today's supercomputers using a fraction of the energy. Cleaner finance? Yeah, that's on the horizon too. This might sound futuristic, but the finance giants aren't waiting. JP Morgan, Goldman Sachs, and Vanguard are already testing quantum systems. JP Morgan has a $1.5 trillion initiative with quantum right on the priority list. Goldman's exploring how these algorithms could supercharge their risk analysis. And Vanguard recently teamed up with IBM to optimize real-world portfolios, like literally using qubits to rebalance funds. Even Deloitte and D-Wave have been testing the waters. D-Wave's early trials show they can replicate index tracking portfolios with fewer assets, cutting down transaction costs. And startups like Multiverse Computing, who just raised a massive $215 million, are pushing quantum-inspired solutions that already work on regular machines while the hardware catches up. That's the catch, though. We're still in what scientists call the NISQ era, meaning today's quantum computers are powerful but a bit noisy. Think of them as brilliant toddlers, lots of potential, a few tantrums. So for now, most firms run a mix of classical and quantum systems. The supercomputer handles the easy stuff, then passes the impossible bits to its quantum buddy. So when will you be able to build your own quantum trader portfolio from your phone? Not this year, but sooner than you'd think. The race between IBM, Google, IonQ, and Rigetti is heating up, and with billions in funding pouring in, these machines are evolving at lightning speed. The leap from lab toy to mainstream tool could happen faster than anyone expects. What should you do right now? Invest in the builders. The companies creating quantum tech, IBM, Google, Amazon, Microsoft, IonQ, Rigetti, D-Wave, are laying the foundation. Or keep an eye on quantum-inspired systems that use similar logic on normal hardware. They're already solving huge optimization problems today. We're standing at the start of a new financial era, one where probability, physics, and profit meet. The same way the internet reshaped communication and AI is reshaping creativity, quantum will reshape wealth itself. The investors who understand that shift now will be miles ahead of the ones still clinging to those dusty, old equations. So, which part of this quantum strategy gets you the most hyped? The supercharged risk control? The ultra-personalized portfolios? Or maybe just the idea of using actual quantum physics to make your money work harder? Tell me in the comments. I'm curious. And if you want to keep riding the tech wave that's rewriting the rules of money, hit subscribe, tap that notification bell, and check out the links below for a deeper look at the companies bringing quantum finance to life. For 70 years, investors have been chasing the perfect portfolio with missing pieces. We've had to settle for approximations and educated guesses, but now the puzzle's finally solvable. Quantum computing isn't just faster, it's smarter. It's the key to portfolios that adapt, protect, and perform better than anything we've built before. The perfect portfolio isn't a myth anymore, it's a math problem. And for the first time in history, we've got the tech to solve it.